Hey everyone, we're hitting another live show. Here we are, back on Thursday. Oh, no, Tuesday. Sorry, it's Tuesday. What's wrong with me? Losing my mind. It's Tuesday, guys. Tuesday, the 28th of January, rushing ahead to the end of the month. January must be one of the longest months for most people. It's quite incredible. Don't forget the risk, guys. Heavy risk. Right, let's get to it. Gonna have a look at the markets. See what happened last week, see what's happening this week, see how we're going. Trades are not looking so good, guys. Bit hectic. Last week we had the US dollar Japanese yen trade in, and it came down. We were long. It came down yesterday. Took the stop loss out, bounced around and went up. And that just the way things go. But then I took a euro Japanese yen sell for the group yesterday, and that is now, obviously because of that, also kind of turned against us, but it is hitting a trend resistance here. I also took an Australian dollar CAD sell for us based on the fact that it came out of this resistance, it's broken through this trend support. So yeah, I'm looking at that as a possibility. It'll continue on short, so that's also in there. We'll have a look at the statement later and see how we're standing, but it's not looking for good reading because the account's dropped 24,484, so like we've lost $515 this month, which is not good on this trading account. But then that said, we took some trades with a group on the Tuesday and then the Thursday. And last Thursday we took some trades, one of them being this US dollar Japanese yen. And this is actually a very unfortunate situation, this kind of trade, where it just shot down, took the stop loss out, turned around and immediately went back up. And that's kind of unfortunate. Look, the stop loss was up there, but still, it broke through it and then just turned around and went back up. That happens quite a lot in trading. It's unfortunate, but you don't revenge trade it, you let it go. Good morning, Luigi. Good morning, Daniel. Good morning, Wendy. Yeah, we were... it's been a strange month with I guess with the Trump speeches and him coming into power and the whole 9 yards. And I think it's had a rather large effect on everything, which has kind of affected the markets as well. So, for example, this New Zealand US dollar trade that we took last week, it's done nothing. The euro Japanese yen trade that I took yesterday has gone against us. The Australian dollar, Canadian dollar that I took that today, and it's just not going for us. The US dollar, Japanese yen trade that we took last Thursday, really, that is a big whack. So at the end of the day, that's how it goes, and we just have to live with it and keep on going. We haven't had a good winning trade. Fear stopped me from pulling in a $5,000 day. That happens, but that's what you're waiting for, Daniel. You're waiting for those winning trades to come along, and sometimes you have to be patient. You have to be really patient, and you have to take a hell of a lot of these little losses in between, and that's the whole point of this. You've got to take these losses to get those wins. Yeah, no, I heard about the whole NVIDIA thing yesterday and the whole AI, and everybody went into panic mode again. And this is the problem, is people go into panic mode and then it causes these moves and these spikes, and then your stop loss gets taken out and it becomes quite tricky. But in many cases, when these things happen and a stop loss gets taken out, it can be relevant, and it can be really good that you had the stop loss there in the first place, because it can go south very quickly. Let's have a look at some of the news items that we might have on hand here. I just want to see what we've got. Yeah, there's the news over there. Let's just go and have a wee look. I have to just always change things around to get to this. Right, there we go. So finance, let's have a look. See, Trump's making a lot of speeches, signing a lot of orders, and doing a lot of strange things. So here it is. Market panic over DeepSeek is overblown, as per usual. It always is. It always is. If you look at the US 500, I'll show you that now. It's turned around and started going back up. The shadow of Trump looms over a cautious Fed. You know, there's a lot going on at the moment, so it's been a tricky month to navigate, to be quite honest. Let's have a look at our trading statement, guys. And this is our A-team account. All right, the first one I'll take responsibility for. That was my mistake, that 45 bucks. Then we got a stop loss on the US 500, 187.80. Then we got a Euro Great British Pound. It was a profit, but it was a stop loss profit again. US dollar, Canadian dollar was a break-even profit, so that was no good. Euro US dollar stop loss, that was a loss. Gold, I felt uncomfortable, so I dumped the trade at 70 bucks, which is not a good idea. I should have kept it. It would have made us a fortune. And then this US dollar Japanese yen that we got stopped out on yesterday, stopped out at 154.50. And that's a total loss of 515. So we've got to get that back. We have to get that back. And at the moment, our 3 trades are actually sitting in a bit of a loss. But this is all on the funded trader market. So, you know, it's funded trading, and that account is now $89. So it's not that bad. It was $100 before. Now it's $89. So let's just go and have a look at the charts again and see what we've got. Go. So if we go back to the US 500, look at this. She came all the way down, broke through the first demand level, hit the second one. There was loads of money lying here, quite a lot. And it bounced out of there. Look at all the buyers coming back in there. This is when all the news hit. You get all the buyers coming back in there, and she's gone back up into this area. Will it continue on through? We don't know. We'll have to see. Yeah, look, if you look at the Trump scenario with the ANC, I'm not expecting much good news between them, because Trump even said he doesn't care about Spain because they're a member of BRICS. And I mean, South Africa's a full-on member of BRICS, so you're not going to expect much support from the Trump guys with regards to anything. So you can forget about any good news coming through there. And that's probably why the Rand is so weak as well. The Rand is really not doing well at the moment. And of course, yeah, it's shifting markets up and down. Cheers, guys. Nice cup of coffee. Okay, so we'll go through the statement again later for those new the guys that come in, or whatever the case, and they can also have a look at it. But this is our account, guys. So if you've got any ideas, put them forward. We'll look at the ideas and see what we can do about the trades. We just don't want to have too many trades in it once in a funded account, because we can only lose about $1,000 in a day. Right, so I'll own up for Euro Japanese yen, and I'll own up for Aussie dollar Canadian dollar. I took those 2 trades, and then New Zealand dollar is a team trade, and the US dollar Japanese yen is also a team trade. It will go fill that gap. It always fills the gap. Oh, you saw the gap there, yeah. You know what? The one thing I want to tell you about a gap, Daniel, very important to understand about a gap, is a gap isn't necessarily filled immediately. A gap can take, it'll fill that gap, but it could take weeks to fill that gap if it wants to. So do be careful not to get caught out by that. We all look at a gap and say, ooh, it's going to get filled now, so we're waiting for it to get filled. But this could still go down all the way to 55.50 before it eventually goes back up, and it will fill that gap. It will go back to the top. So in other words, if this was to correct now, I'd actually be much happier than if it went up. Because if it corrected now and went all the way down here, you just have to buy and just hold on until it gets to 66, and you'll make a fortune, because it will fill that gap. It will go past that high, and it will go back up again. So I like it if it corrects rather than if it just goes straight back up again, because this isn't much of a correction. And to prove that, I mean, you only have to have a Fibonacci on the system to prove that, and you can see that it's nowhere near. Do I have Fibonacci on here? Is there any? Yeah, there's Fibonacci retracement. Shall we have a look at that? Just out of interest, there's a fib, okay? It's an interesting looking fib. Why is everything purple on these charts? Goodness me, it's unbelievable how purple everything is. Can we have a different color? See what blue looks like. Okay, so on the fib, if you were to look at the S&P or the US 500, it's hit the 38% and bounced back up. It did come down into the golden area. It did come down to 61.8. So look at that. It actually bounced off of there and it's gone up. So it actually has bounced off the fib, which is quite interesting. So there's a good chance it'll just carry on going up from here if you look at that. But that happens so fast, it's very difficult to catch it if you were trading, even if you were trading with a Fibonacci or whatever the case. But it came down, almost touched this trend resistance or trend support, bounced off that and headed on to the upside. So it bounced out of the golden area and headed on up. But this level down here at 59 is very, very, very important. As you can see, there was a demand of money there. And if it gets below that, then it'll break all the way down to the 100%. But it looks at the moment like it wants to carry on going up. It'll probably break through this level and head to the upside. Good chance of that. Okay, Euro Japanese yen seems to be coming back. All right, at least that. Not as bad as it was. Exactly, we know where it's headed in the long run. We know exactly where it's headed in the long run. What I'm looking for in the US 500, I mean, if I can get in a level down here, nice and cheap, and just buy loads of it and hold it, that's like an amazing profit for anyone. That would be great. That'll be what we're looking for effectively. Now, the psychology of trading, I was actually going to discuss that with you guys. This US dollar Japanese yen trade, this is where the psychology comes into play, because you get so emotionally attached to things that when this does this to you, you start to get the emotional feeling that they're hunting out your stop losses, they're hunting out your money, that you just, it's just your trades or whatever the case. Because this isn't, it's almost like a black swan event. It just comes down, takes it out and goes straight back up again. And you start to feel that the world has got it in for you. But it's not. It's not the case. You have to separate your emotions from the trades, and that's really important. Now, if you look at this, it's shot back up, it's hit this trend resistance, and now it's looking like it wants to come back down off that. Good possibility it might do that. It was breaking through, and if it closed above there, up there, it was actually looking like it was going to go long again, but it looks like it wants to hit resistance and come back down again. So that's something you've got to watch out for, is that emotion that you attach to your trading. And that's where the difficulty comes in with all trading, is the emotions take over and they kind of beat you up. They kind of beat up your mindset, and it drives you insane, actually. It drives you completely insane. So I see the channel's struggling to pick up those 10,000 subscribers, Daniel. We have to push for that, eh? We have to get above that and break a little record. Got these little records that we've got to break and get ahead. Yeah. But yeah, guys, our trades are, they are what they are. Let's see if we can get some more people on board, and then we can have a look at it and see. Yeah, you see, the trouble is, as well, Daniel says it's a result of group think. A lot of people were thinking the same way you did. It's just getting closer to those big wins, as you say. It's difficult to be patient. It's difficult to wait for that big win to come. And you're not going to get always, it's not always going to be 50-50. In fact, those big wins in some cases will be less than you think. And in a month like this January, it's been a tough month to navigate and to get through. But you've got to look at your profits over time. And you've got to be patient waiting for those profits to come in. So they will come. They will eventually come. Those big wins come, and then they negate those little losses all along the way. But it's taking all those little losses all along the way that becomes difficult. And that's why people start taking on scalping. They start going into scalping because they start to believe that the chart's never going to reach their win. So what is this? New Zealand dollar, US dollar. So we've got a target up here, and we think, well, why isn't it ever going to reach this? But you've got to look at the overall chart. The chart's been there before. It goes up and down. So why wouldn't it reach the target? There's so many cases like this. Australian dollar, Canadian dollar. Here's the chart. It was at our target. Our take profit is here. Right inside that. If you're patient enough, this might go up and down, up and down, up and down, up and down, and eventually reach our target because it's trading in there. So the problem is we don't wait and we grow impatient. So we start scalping because we think that we're never going to reach those targets, because every time we're in profit and then it starts to go into a loss, we don't realize that charts go up and they go down and they go up and they go down. But on that way, they're going in the direction you're waiting for. And it's heading in the direction you're waiting for it to get to. So that's the whole point of trading. You've got to be able to wait while it goes into loss and then goes into profit, which is why you put a stop loss at a certain point with a view to that's going to stop it from going too far or going all the way. Now, Luigi, the Discord channel is for everyone. And I was playing around with having a Discord channel for us last year, and it is open, and I can send you another link, but I kind of, maybe it's my fault, I just kind of lost interest in it because there was a scammer or two that got in there and tried to sell the guys rubbish and whatnot, tried to copy my name, copy my logos and everything, and it's kind of irritating. So I need to find another way around that. Discord is useless. You send them the support any information and they just ignore you. It's kind of dangerous. I'm kind of worried about it. It's not great. It's really, we can carry on with it and I can send you guys links. And that's the other thing. Every time I get a link and I send it out to everyone, the link seems to expire in absolutely no time and nobody can get in with a link. The link doesn't work. So every 5 minutes I've got to go and look for a new link. It's crazy, man. It's absolutely crazy. I can go in and get a link and I can post a link here. Morning, David. How's it? Welcome. Let me see if I can, where is Discord? Can't even remember what it looks like. I think that's the Discord channel. No, that's something else. See if I can find the Discord channel on here somewhere. I know I used to have it here. Oh, that's probably it, Discord. Right, so I'm switching it on and we shall see. I can get you a link onto the trading. Okay, try and get you a link onto the trading. There's a few guys on here. Just don't buy anything from anyone, even if they say their name's Rob, on the Discord, okay? Just remember this, guys. I'm going to give you a link now. If somebody says, come and buy this off me, blah, 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 and tells you a whole lot of rubbish, it's not me, okay? It's some trying to impersonate me. It drives me insane. Seriously, guys. Yeah, I don't know what I did now. I must certainly did something wrong there. Okay, I'm trying to create invite. There you go. All right. So what I'm going to do is I'm going to copy, and then I'm just going to see if this creates an invite for you guys. Boom. Goodness me. That didn't work either. Just hang on a second, guys. I'm working on this, trying to figure out how to get you guys a... I'll tell you, even getting an invite is... send server link to a friend. Hit copy. And so let me see what this does when I come back here. See what this looks like. Forgive me if it says hidden use copy button. It says hidden use copy button. Unbelievable. Gosh, this thing is yeah, this is absolutely brilliant. I don't suppose you could. Your invite expires in seven days. No limit. Okay. Generate new link. No, it still says edit in 7 days. Edit. Never expires. Maximum number of users, no limit. And then generate new link. And all I get is this nasty looking. Okay, so what I'm going to do, I'm going to put it under general. See if I can get a better link out of that. Yeah, it looks the same to me. Doesn't look any different. No limit. Generate new link. Just says use copy button. Ah, you're going to drive me insane, seriously. Inbox, threads, notification settings, show member. I'm not very set up with Discord. So somebody click on that hidden use copy button and see if it goes to Discord. I don't know. I don't know what you're going to get out of that. Lest you go passing my first stage. Yeah, the funded accounts, you know, use them to get used to trading. Use them to, it's almost like trading with real money. So use them to get used to trading. And if you pass the challenge, then you get paid, which is great. You make some money off of that. Yeah, let's just keep it to trading as much as possible, Luigi. If I find a link that works, it's driving me insane. It drives me insane. That whole Discord thing drives me insane, to be quite honest with you. I'm going to try and find the link for you guys, and I'll try and work it out. Normally they give you a link. Normally a link comes up, but I don't see a link today at all. There's just no link coming up. I don't know. It just says hidden use copy button. I've tried for a never expire link. So what I'm going to do, I'm going to try and get a never expire link. I'm going to put it in the descriptions of all the videos, and well, from here on, because the ones in the past obviously are not going to work, and I'm not going to go back 400 videos and put links in, but I'll try and find a link that works, a forever link. But then, guys, just please understand that, yeah, if anyone tries to sell you something on here, it's gonna be a scammer, most likely. Well, it's definitely going to be a scammer. It's not gonna be me. Because, yeah, I haven't had much luck with that. Okay. And I can't control it. I tried contacting support, like I say, and all I got was, yeah, nothing back. That's your problem, so to speak. I've seen the Telegram thing. Don't know how that works. I'll have to look at it. Gold going short. Okay, let's have a look. Gold. What I'm seeing on gold, Wendy, well, that does kind of look head and shoulderish, doesn't it? But just looking at this, there does appear to be money here and also a trend support here. So I think what we need here, Wendy, is for it to break through this trend support, perhaps this money level, and then it's short. But I think it's going to dump into this area here, turn around and go long again. So just be careful of this. Don't just go short on it as we stand. It's not looking too comfortable as a short. Oh, you've got the same scammer problems on Telegram, but that's not going to really help either. Yeah. It is difficult with these guys out there. You know, they're all trying to... What, you know, if they just put their efforts into making an honest buck, maybe they would make a buck, you know? It's always about trying to steal from people, and that's crazy, you know? That's why I can't even put, like, a real trading cash account on here because I'm scared that account number, this is a funded account. So a funded account, I mean, if they steal a funded account, they're literally stealing, what is it, $89 or something I saw just now, or $100 or whatever the case. But if they steal your cash account, there's $100,000 in it, that could be quite tricky. Got to be careful. Yeah, that's why I say it looks very head and shoulderish, don't it? It looks very head and shoulderish. What I would do here, because the head and shoulders is only valid if this right shoulder plays out, which means that price has got to come into this area of money here anyway. So what I would do is just wait for it to come through this trend support, maybe through this money, and then you've got a head and shoulders short here, which will take you down to about 26.70. If that happens, something must be happening in the market, and we'll be getting quite a run. But if it bounces off this trend support, then it's not really it's not a valid head and shoulders because you see the low is down here at 27.30. How's it, Roy? Welcome. So yeah, it looks very head and shouldery, but it's not developed yet. Everything, it's got to develop before you take it. Right, strategy. I've put videos out about strategy, and you guys keep on watching them, guys, because that strategy is more important than the squiggly lines. We all know that the squiggly lines are not going to make us the money. We all know that the money's made in the strategy. Except for all those other guys out there who are trading on a system and only a system. It's quite amazing, actually, how people go on a course and they get taught that this system is going to make you the money. They don't teach you that it's going to be a high probability trade, that it's possibly a good high probability trade. They rather teach you that it's going to make you all the money and you're going to win 6 trades out of 10, 7 trades out of 10. And it just doesn't work like that. If you don't have a strategy on making money out of the market, you're not going to win. It's always going to be win rate, trying to win off these systems, and they're always going to keep letting you down. You're always going to be looking for a new system, and you're always going to be trying to find that magic bullet. People don't believe me. It's unbelievable. People don't believe me when I tell them this, but my system works until it doesn't work, and then you're looking for another system again. Price action, the reason I use it and I take away all the noise is because it doesn't matter what system you really use. It's always going to be the same if you don't use a strategy, if you don't use the strategy to make your money, which is managing your risk and simply making more on your wins. It is just insane how people won't listen. Gold, I go long 27.24 or 27.25. Jan, yeah, absolutely, if you want to, but just be careful, Jan, because like I said, 27.25 will be in this demand area. That will be there. There is money there. Good chance it's going to bounce up, right? So good thinking. But one of my concerns would be that it's broken through the trend support. It will be taking that money, but if it breaks through that money, it's created that head and shoulders, which will take it down. So what we're waiting for here is to see, will it bounce up or will it bounce down? Best way to do that is just wait for the candle to confirm for you. Let the candle close, let it tell you, okay, you can go long or you can go short. And then you know which way you're going. Daniel says, yeah, the system works. They make money from the system selling it to you. That's very true. The guys do make money from the system selling it to you. Those courses are expensive. Those courses are very expensive. I know that. I don't know how much they cost nowadays, but I know they're expensive. But, you know, you don't need a course, a full-on course, to know the strategy. The strategy takes me, I don't know, a few minutes, 10 minutes to explain to you guys. That's all you need. The rest is just find the way to trade with high probability trading, which is what you're doing on a daily basis, even with me. You're finding a way to trade with high probability win. You're finding a way to trade that's comfortable for you. You're finding a way to trade in the markets. You could be taking information from a whole number of different traders. I know Daniel does that. You take information from a whole number of different traders. You get that information, you collate it, you use it in your head, and you figure out what works best for you. That's the only way to do it, because no two traders can trade exactly the same way. This doesn't work like that. And the other thing that people need to understand is we're not trading against an algorithm. We're not trading against lines. We're not trading against maths. Everybody tries to turn the stock market into maths, or Forex into maths. And yeah, you need to know a little maths to be able to do this, obviously. I mean, that goes without saying. But this is not about maths. This is so subjective. I tried to say that to you guys in the last couple of videos. There's something I only brought up recently is the market is more subjective than you think. And the reason it is subjective is because it's made up of traders. Human beings are trading, not robots. Human beings are trading. Doesn't matter if a bot's trading. It doesn't matter how the size of the trade. There's a human being behind that wants to make a profit. 100% of traders want to make a profit. I don't think any of them are in it to make a loss. And guess what? We're all trading against each other, effectively. Some of us might trade as a team like this. We're the A team, and we're trading together. But there's a whole bunch of people out there that you're trading against. When you start to get that picture, it helps you a lot. When you understand that you're not trading numbers, you're trading people's feelings, emotions, their thoughts against your thoughts. It's the only thing you use the candles and the charts and the lines for is actually to give you direction as to what all the other traders are actually doing at that moment in time. And you want the best probability of making a profit in the future by seeing what they did in the past, which is why these charts repeat themselves. They don't repeat themselves because they're a mathematical anomaly. They repeat themselves because human beings repeat themselves. Think about that. People repeat themselves. We're creatures of habit. We do the same things over and over and over again, even if we try not to. And that's why charts repeat themselves, because human beings repeat themselves, because trading is human beings in the market. It's all about humans. It's all about people. It's all about people's emotions and people's fear. And that makes the stock market or the markets that are made up incredibly subjective. Hi, Shane. Good to see you. You've gone in early on selling gold with good risk management. You know, Shane, the market's 50-50. As I always say, it's a 50-50 game. Here's your gold. You've gone in. You've taken a choice. You've gone short. Risk management. You know, if you take all these lines out and you just take a trade with the risk management, you've got a plan. You've got a plan. You stick to that plan. You work with that plan. Guess what? It's going to work out in the end. And the strategy is simple. You're going to win some, you're going to lose some. Simple as that. So good for you, Shane. That's how it works. You've decided that this is going short for whatever reasons, and no two traders, by the way, will have the same point of view. And you decide it's going that way, you take the trade and you go for it. You know, I once knew a trader that would go against what everybody else said every single time. If somebody said that trade's going long, he would go short. If somebody said that one's going short, he would go long. You know, he had a better win rate than most people. So yeah, the market's a 50-50 game. And as long as you know that, and as long as you understand that there's traders in the game and you're trading against each other and it's 50-50, then you know you can take the trade, put your strategy in place. Strategy is easy, good risk management, try and make more on the win. That's it. That's a trade. That's how it goes. And yeah, I'll give you that. Support and resistance will always win for you. You see it, you trade it, nothing complicated, most important, teachable to a 5-year-old. Yes, that's the point I try to make is The actual charts and the actual charts on the screen, you can teach to a 5-year-old. You can teach this to a primary school child. The difference with the win is you can't teach the strategy. The strategy has to be understood, and then you have to implement it. And then you have to get over things like emotions, fear, FOMO. Fear of missing out is a huge one. How many times have I said to you in the videos, take a brick and whack your hand, or sit on your hands? That's FOMO. You cannot believe how FOMO destroys your trading. Fear destroys your trading more than anything else. Emotions, getting emotional, growing attached to trades. These are all the things that you have to overcome. And those are the things you can't teach to a 5-year-old child. Those are things that you have to grow with, and it takes time, and it takes so much time to get over that. And even when you know it well, when it's like second nature to you, you know what? You still make the same mistakes over and over again. Doesn't matter who you are. You always make those same mistakes. It never changes. So guys, I'm just going to show everybody where we're standing with our account again, so that we're all on the same page. Yeah, it'll be over here. Let's just go and have a quick deco. So guys, this is the account this month where we are, and how we've gone down. So those of you guys that already watched it, that's fine. There's a few extra guys on. So here's the account statement, guys. The first one, I take responsibility for the mistake when I opened the account for us and I clicked the wrong button. We lost 45 bucks. But then real trade, US 500, stop loss. Then your real trade, Euro, Great British Pound, profit, but also stopped out. US dollar, Canadian dollar, break even, stop out. Euro, US dollar, stopped out, lost. Gold, that was my fault. I took the profit early on the day we were talking. FOMO caused me to take that. Well, actually, more like I was worried that trade was going to go against us badly, and it actually would have gone for us really well. So that is, I'll take responsibility for that one. And then US dollar, Japanese yen, we chose it as a team last week, and it lost yesterday. It spiked through. So we're $515 down on the account. We need to recover that. We need to get that back. So how are we standing on the account? Let's just go, and where are we? I just have to get back to where we're supposed to be. It takes me a second, all this technology, you know, but it's not that bad. So we've got 3 trades open at the moment. We've got the Australian dollar, Canadian dollar. I took that this morning, sell. We've got an Australian dollar, Canadian dollar. I took as a sell for obvious reasons. There's a resistance. There's a trend resistance. And there it's broken through the trend support as well. So I'm just looking at that as, okay, let's give it a short trade. Euro, Japanese yen. It got up to this sort of trend resistance now, but yesterday it had broken through here and it looked like it was heading down. So I took the short and it's gone against us, but it has hit this trend resistance now, and maybe it'll go in our favor now. We'll see how that goes. And then New Zealand dollar, US dollar, we all took together last week on Thursday. I think we took this trade and we took it long. It is against us at the moment, but not too bad. And it is still bullish. It is still on the long side. If it breaks through here, we're going to have to call it invalid. So we got these 3 trades open. Let's see how that goes for us. And then the US 500 appears to be turning around and heading to the upside again. Yeah, you know, Daniel, you say you fight that fear dragon every day, but you know, you're going to fight it every day, and every day. Just, it's never going to stop. It keeps on, and it always gets you. And, you know, as you go through with trading, it gets better, but it's never perfect. It's always going to be an issue. It always catches you out. It always gets you. Even if it's not fear, it's just like what I did with the gold trade where I got out too early. You know, it's not even fear. It's kind of like you're looking at it and thinking, yeah, this one's going to cost us money. It's going to go against us. It's not like you're shaking in fear. It's just like you're thinking it's going to go wrong. So you take the trade out. It's not even FOMO. It is fear, but it's not an immense fear. It's just like, I don't want to lose on that trade. So I'll take this profit early. And then it goes and it makes you 400 or 500. It would have made you 400 or 500 bucks and you made 70 bucks. And you look at it and think, it's just, it drives you nuts. Emotions, for example, this US dollar, Japanese yen, you feel that sort of, that little bit of anger, like how, why, it comes down, takes it out and goes back up. Why did it take that stop loss was far enough away from everything. It shouldn't have taken it out, but it did, and it does. And it even after 30 years of trading, I look at it and it's not even my cash account. This is the funded trader account. And I'm looking at it and going, come on, man. What are you doing? So emotions always going to be there. And if you don't have that, it's probably dangerous for you to be trading. If you don't have some emotion, if you don't have some fear, if you don't have some control, because come on, let's be honest. If you're just going to go willy-nilly and you don't even feel it, there's a good chance you're going to bankrupt yourself. So just be aware of that. Yeah. Okay, so has this thing... Is everything working here? I mean, that looks like it's way behind. Oh, okay. Good. The US dollar Japanese yen trade, yeah. Shane, that just went wrong for us. What actually happened on the US dollar Japanese yen trade is just insane. We were long, was going well, and it just came straight down, took out the stop loss, and just turned around and went up. And I never revenge trade. It's very unfortunate. It's almost like a black swan event. Whatever happened caused this to happen. It happens. It just happens, and it does annoy you. Okay. This is the euro US dollar, and I was actually quite surprised that started going long. Frederick, how's it? Welcome. Good show. Good to have you back. Tommy says people don't fail because they don't know enough about technique. They fail because they don't understand what the markets are doing to their minds. Exactly that, Daniel. And if you don't understand that there's going to be losses in the market and that sort of thing, then you're not going to understand the market. But we zone in on systems. We zone in on technical charts. We zone in on the money's got to be made there. When we know that the money's not made there, the money's made by your system of risk and management and taking profit and that sort of thing. So, but we still zone in on the high probability system to make you money. The high probability trade's not the one that's going to make you money. Shane put it in a nutshell earlier when he said, I'm already in early, I'm in short on the gold, and that's my choice, I'm on it. And that's how we trade. You manage the risk now, and if it goes in your favor, great stuff. If it goes against you, you've managed the risk. You're looking to win at least 50% of your trades. Even if you only win 30 or 40% of your trades, as long as the risk management is right, you'll actually win in the end. You'll make the profit in the end, but you have to stick to the plan. You can't keep changing the plan. You've got to stick to the plan. So like on this account, our plan is simple. Our plan is we're going to lose $200 a trade. And, we've had a bad start on the account. We're $500 down. But it only takes, think about this, and it's only going to take one win, and you'll be back at break even. 2 wins, and we'll be up. 1 good win. So one decent win on this account right now, if one of these trades goes into our target, we'll have made all that money back. 2 wins and we'll be way in profit. Think about that. Now, at the moment, every single trader out there does it the other way around. They follow the losses, and they have huge losses and small wins, and it's impossible to get the win back. Whereas now we're sitting in a situation where we really only need one of our trades to work, and we're break even again, 2 of our trades to work to be in a massive profit. Whereas we've lost quite a number of trades, 3 or 4 trades. 1 win and we're back in profit. So that's how it works. Jan, S&P probably going to close the gap at some time and then move higher the way Trump is going. You know what I would really like on the US 500? As I said earlier, what I would really, really like on the US 500 is, I wish this thing would just come down to a nice level down here, and I just load up on it, man. Just load up on it and buy, because this thing's going to go to 6,600, if not that, 7,000 this year. I just don't want to buy it at 6,000. There's too much going on at the moment. And as a trader, I want to trade it. So I want to get in a nice area down here, get a nice trade. But that said, if it breaks to the upside here, I probably will buy it. And we'll get in it and go with it. Yeah, focus on winning the trade. Wendy says, I may need to explore other pairs, but isn't it a good idea to stick with a few and learn the tendencies? No, Wendy, it's not. What it's good to do, and now I'm going to explain this to you, to everyone, in the best way possible. There's a lot of people out there saying to you, only trade with the New Zealand dollar, US dollar. Don't trade with anything else. And get to know the patterns and how it runs. I get what they're saying. Number one problem you've got is that's only really going to work if you're trading on a 5-minute chart, because then you've got lots of up and downs. But a lot of these pairs and a lot of these indices and a lot of these commodities kind of run out of steam, and then they do nothing for a while. And then you've got to look for something else. No, what you need to learn is the strategy of trading. Then realize that everyone that you're trading against is a trader. It's not a line, it's not a chart, it's not a Forex pair, it's not a commodity, it's not an index. You're trading against other traders. There's traders in the market. I'm trying to get to a point here. Now, the point is this. Once you understand the strategy of managing the risk, making more on your profits and losing less on your losses, then it's not about the instrument, and it's not even about the high probability system or high probability trade. So you learn price action, you learn high probability trading. Now you can draw a support and resistance line on absolutely anything. If somebody walks up to you today and says, how's Ethereum doing? And you've never traded Ethereum in your life. I mean, I haven't. And you switch it on, you look at the chart and you go, oh, there's a resistance, there's a support. You can draw a support trend line in if you like. Have a look at it and say, do you know what? I'd go long on this trade. Okay, that's great. Now, any normal person will jump in and just go long and, we're trading. No, but you're different. You've got a strategy. You're going to go, okay, we can go long on this trade, but the first thing we've got to do is work out what's our stop loss, and then work out how big's the trade going to be? How much are we going to lose on this trade? Because this is how much we lose on every trade. Where's the take profit? Is the take profit, risk to reward, worth my while? You've got the strategy working in your head. You can trade absolutely anything. If somebody comes to you and says, trade NVIDIA, trade Anheuser-Busch, whatever, as a share, you can use exactly the same system on it. Somebody says, trade the US 500 and you're used to trading a Forex pair, you can trade it. Somebody says, come and trade Bitcoin. You can trade it. because you've got a strategy for trading and you've got a system for trading that we've put together, a price action system. So if you want to trade this, you absolutely can. No problem. You can trade this as much as you want to. That's just as simple as it gets. You don't have to, how can I put it? You don't have to just trade one thing and understand how it works. You can trade anything. You can keep it to a limit. You know, you don't want to overextend yourself sometimes. There's things that I don't even look at. But I put all these on my watch list and we can trade any of them. Some indices, some Forex pairs, some commodities. You don't want to overlap your commodities. I mean, I trade Brent. I don't want to trade Brent and WTI and all the rest of them because they're all the same. Just trade Brent. Gold, I trade gold. I don't trade silver because gold and silver kind of trade the same way and gold's got more liquidity. So I trade gold. The indexes, I trade as many indexes as I can. And I trade as many Forex pairs as I can. You don't want to only restrict yourself to US dollar as well. You want to play around a little bit. Like here's Australian dollar, Canadian dollar, New Zealand dollar, US dollar. You don't want to keep them all the same because then you're just restricting yourself to one particular type of currency pair. So that's how I look at it. Trade anything. Because you learn a strategy and you trade with price action as a high probability trade, you can trade anything. That's the point. So, Wendy, explore trading anything. Try your luck at trading, widening your horizons a little bit. Try using the method to measuring on other products and what's out there. Try drawing your support and resistance lines on some different things. At least have something to look at. This takes me a few minutes in the morning to go through and a few minutes on the weekend to go through. Doesn't take long to go through all these pairs. Really doesn't. You can do it really quickly. I think Brent is going to be bearish. It looks like it's continuing on to the downside. But like I said, when did I say it? A couple of weeks ago. Brent, as it stands at the moment, is in a range between around the 80s, 82, 83 here, and 65. It always is. 65, I never really see it in all the years that I trade. I never really see it drop much below the 65, apart from when we had the COVID scare, and then it went down to 0. But further than that, no, I never really see a problem with it. It normally trades between the 65 and 105, 120. But in general, it's trading between 85 and 65. It's in that range. So at the moment, it's hit the top. It's coming down. It's 77. It's probably going to come down to about 70, 71, 72. Play around there and then maybe start working its way up again. It's very dependent on the cartels that run oil and how they price it, and they sit together and they monopolize it and push the oil price around. That's why it doesn't go one way. It gets manipulated up and down all the time. And then it depends how much oil is available in the US and how much oil is available in the land of oil and, you know, all that sort of stuff. Yeah, and that's, as Daniel says, the beauty of the system is that you can effectively trade it on everything, and you can also trade it on absolutely any timeline. Choose your timeline. If you want to trade 5-minute charts, you can use it for that as well. Just remember, the lower the time frame. So if you go down to 5-minute charts, I know I'm going to tell you 99% of traders lose, but there's a reason for that. And the reason is you want to take a high probability trade. The high probability is I want to win something in the future. Now, if you go down to the 5-minute charts, the information that the chart is giving you for that high probability trade is unreliable. It's not reliable information anymore. that information is withered away because it's going so fast. But you go higher up, you go hour, 4 hour, daily, weekly. The higher up you go, the more reliable the information becomes. And the reason for that is the quantity of trades. If you take a group of anything, the larger the group that you put into the experiment, the better the result. So if I take 5 traders and I put them in a room and I say, let's trade this system and see what happens, and 3 traders win and 2 traders lose, you're going to say, ooh, 2/3 of them won, man. That's a fantastic system. That's your information that you got. If I take 100 traders, I put them in a room and we trade the same system, you're going to get a completely different result. Suddenly, only 20 win and 80 lose. And you go, oh, wait a minute. That's an 80% loss. What happened there? No, what you did was you got a better result out of a larger group. The bigger the group, the more information you get. The same thing happens with time frames on a trade. The higher the time frame, if you go 4 hours daily, weekly, one candle represents a huge amount of trading in comparison to a 5-minute candle. It's a lot less traded in those 5 minutes. So the amount of people trading in their 5 minutes and the amount of people trading in a day, it's a different package, a different result. You're going to get a different result from it. That's why the higher time frames are more reliable, because there's more people that have traded. There's more information available on that candle. It's not a candle. Candles don't make charts go up and down. Price doesn't make charts go up and down. Human traders make price go up and down. So the more people that have chosen to go up gives you a better amount of information than a smaller amount of people telling you that it's going to go up, for example. So yeah, the lower chart, it's a snipe. They call it a sniper entry, but do be careful of those sniper entries. I use them sometimes as well if I'm trying to get in and I'm impatient and I can't wait anymore, because that's human nature. And you're like, I just need to find a way into this trade. So you drop a few time frames. It can bite you because the information is unreliable. And just because a candle is going in that direction doesn't mean it's going to carry on going in that direction, because the numbers are reduced again. It's just a whole bunch of people thinking the same way you do, looking for a sniper entry, and they've all gone to that candle and they've all said, look at that, we'll go long. And then you end up with it going against you as well. So sniper entries don't always work, but they can be helpful and they can be handy if you're looking for a quick way into the trade. So yeah, a lot of people do that. And look, if there's a large move, then it's kind of obvious. But if it's just one candle or one move, then it can be difficult to get good information out of it. But yeah, it's just how it goes. It's understanding that it's almost like understanding, if you just take your mind away from the chart and you start thinking about the people that are actually doing it, then it changes your whole mindset as to how the market works. It's that sample size that is so much bigger gives you a much better risk-reward information scenario. Because it's all about risk at the end of the day. So what you're doing is you're like a sheep. You're following the pack. You're following the pack, and that's what makes you the money. But if you follow the small pack, they might lead you off to the wolves. Just remember that. And that's why 99% lose on the small time frames. That's also why a win rate doesn't matter. A win rate's... I don't know why people place so much into a win rate. Maybe it's boasting rights. No, a win rate's not going to get you anywhere, guys. All a win rate does is say you took those high probability trades, you won so many times and you lost so many times. But it doesn't take into account the factor. If you were to make a formula of win rate, it doesn't factor in as part of the formula the amount of profit or loss you made on each individual trade, which makes it a useless formula. Get that? So, yeah. The win rate is not going to convince me of anything. So, yeah, last time I asked you guys, what system were you using before you came onto price action, if anything? Or is this your first system? Because I can tell you, if this is the first system that you're using for trading, you're a very, very lucky trader, because you haven't had to go through all that other BS that's out there and all that rubbish. You found the simplest and easiest way to trade to start with. And that is, I wish I'd got that when I started out, but well, effectively I did. Trading was so much simpler for us back in the day. As I said to you many times before, we traded with pens and pencils. Take out your pens and pencils and draw a little chart, and we would draw a line through the middle. That was your 20-day moving average. And you were like, if the price goes through that, then we're going to buy, and if the price comes back through that, we're going to sell. That was as simple as it got. I mean, it was the simplest trading ever. And that's why you'll find a lot of old traders like me that trade as simple as possible. It's the new traders that have got overcomplicated because they came into the market with computers and systems and indicators and all these fancy things that the guys invented over time and promised that would make you money. They promised you that if you just follow these lines, they'll make you loads of money and they'll give you a win rate. and unfortunately, people get sucked into that, and then they end up losing large sums of money. But if you grew up like I did, without all this stuff, and we didn't have computers when I started, then your brain's already set in understanding that you're trading with traders. You already know this. We used to speak to them for real on a telephone. Imagine that. And we understood how simple the strategy was. And even when it became overcomplicated and they brought computers into it, I got to admit, it was like a dream for me. I love computers, and I was like, oh, this is amazing. Look at all this fancy stuff. But luckily for me, my brain was still set in a very simple way, and it didn't get overcomplicated. We tried a few things, we tried a few different things, and then I realized, hang on a minute, that's not the answer. That's clearly not the answer. But by the same token, I did make an effort to learn all those different systems. Even Ichimoku, I couldn't even pronounce it for a while. I learned that. I've learned all the systems, all these different things that come about. I mean, even when ICT came out, I immediately had a look at what these guys were getting on it and what have you. And I figured out that all they've done is copy this. And basically, this is based off the old Wyckoff system. And they've just taken some simple stuff like this and overcomplicated it. That's all. Made it really fancy and complicated, and people going, oh, look, there's gaps here and this and that and going mad. That's all they've done. So yeah, I have a look at most people or most of the other systems that are out there, high probability systems, and just figure out how to work with them. But I must say, in my older age now, I've kind of given up doing it. If there's anything new coming out, I let it go these days. I can't be too bothered with it. It's I know it's all the same. It's over and over and over and over again. And now there's a lot of guys claiming that DCA works, and I've seen that hundreds of times over the years. Different systems coming out with DCA. It doesn't work, dollar cost averaging. Then there's bots that have come out now. All these bots, people are putting a bot together and saying that will now trade for you. If that worked so well, if bots worked so well, don't you think that all the pros with millions of dollars would be using them? It's the reason they don't use them that much is because Like, some of them do use a few here and there for small things, but effectively they won't bet their money on it because they understand that the market's subjective. They understand that you've got to have a feeling for who's out there and what they're doing. And the bot can't do that. The bot can only take what you've programmed into it and work on a mathematical system. And unfortunately, the markets don't work on a mathematical system. If the Fed stands up and starts talking about the economy, the markets go shooting up or shooting down, not because of a mathematical equation, not because of a bot, not because of an algorithm, because that guy said something, and all the traders who have their money in the market reacted to it. They reacted to it. Oh, we're going to make money here. Oh, we're going to lose money here. So they all sold or they all bought. It's a reaction. It's a natural reaction. So understand that a bot can't see that. A bot only trades on algorithms and maths and that sort of thing. It can't see the guy standing up there and saying anything. All it can pick up is all those real traders in there that are maybe selling off. It might pick up that candle coming through and it'll stop you out or something like that. But it can't pick up the reality. It can't pick up real life. That's why people don't make fortunes out of it. Shane, DCA always ends in tears. Without fail. Always ends in tears. I've seen it so many times. DCA just is DCA. Exactly, Kevin. If that's another thing I forgot to mention, if bots worked, imagine if the market was only made up of bots, if there was no human beings, if it was just robots. All these robots would be trading against each other. So then I guess the more intelligent robots would beat the less intelligent robots, or because somebody has to lose. That's the point. Somebody has to lose at the end of the day. But Shane, DCA, no matter what system you use it on, the problem with dollar cost averaging is this. It seems to work in the beginning, but to have a dollar cost averaging system, let me put you in this picture. To have a dollar cost averaging system, so if we take a trade, we don't dollar cost average. We know that we've got on this account a $250 stop loss. We know that. And we go in with our full trade, we hold that stop loss, and we take our win, and our win is $500, let's just say $400 or $500, and we're happy with that. Okay, now we've made our big win, and off we go. But if you wanted to dollar cost average that, you'd think, well, we can't go in with a full trade, so most people who dollar cost average go in with a 1/10th trade. So now you're going in with a $25 stop loss. Okay, so let's say the trade goes straight into a win. So that trade's going to make you $50. Now let's say you win a couple of trades and you've won $150, and then one of them goes into a loss and it goes down $25, so you dollar cost average, so you're $50 down, dollar cost average, you're $100 down, you dollar cost average again, you're $200 down, you dollar cost average again, you're $400 down. Now you're waiting for it to go back up and get back to cost, but the trade decides, nah, we're not going to do that, we're going to keep on going down. There's a point where you got to turn around and say, I've had enough of this, I'm $1,000 down, let me get out of that trade. And that's the problem with dollar cost averaging. There's a point where you got to say, I missed the bus here, this has gone bad, this has gone south. But normally by the time you get to that point, you've lost so much on the trade that it's taken out everything you ever won or made, or it's buried it. That's the problem with dollar cost averaging. I've seen it so many times. You know, maybe the first 10, 20 trades, 30 trades, maybe they work. Maybe they go in your favor. But there's always that one. There's always that one or two. You see, they don't always do this, like this US dollar, Japanese yen. They don't always do this, where they bounce and go back, because that would have been a great dollar cost average, let's be perfectly honest. You would have dollar cost average and it would have gone for you and you'd be back out of the trade and you'd be happy. But in many instances, it does this. You go short on the US dollar CAD and it goes all the way, and you keep dollar cost averaging, dollar cost averaging, dollar cost. Somewhere along this line, when you were short, somewhere along this line, you've got to turn around and say, I can't take any more loss. I've got to get out of this. Because you just keep on losing, losing, losing. And the more you double up on your dollar cost average, the bigger that trade's getting. It's getting gargantuan. So every time it continues losing, it just gets worse and worse. And in multiplication, like a snowball, it just keeps like really getting bad. If you want a dollar cost average into your profitable trades, not your losing trades. I just thought I'd point that out because I've just seen it so many times. Believe me, I tried the system. I've experimented with it on numerous occasions. I even experimented with it for you guys last year, and it already started failing, so I gave up on it after a few trades. It's not something that works. You see, Shane, even with fixed stop loss targets, right? If you've decided on a stop loss, then you've clearly decided on a stop loss you're going to have to work it out. How many trades are you going to take? How many dollar cost averages are you going to do before you stop loss? Are you going to say that I'll dollar cost average this trade 3 times and then I'll stop loss? Or I'll dollar cost average this trade 4 times and then I'll stop loss, okay? So if you're going to do that, then why don't you just go into the trade with that stop loss and see if it works out? Why don't you just do that? You know, it's because then your stop loss is going to be at that point anyway, isn't it? So the whole point of dollar cost averaging is to have no stop loss. In other words, I'm always going to dollar cost average until I get back up to cost, until I can't take it anymore, and then I get out. But if you're going to put a stop loss in, if you're going to say, hey, listen, I'm going to dollar cost average this thing 5 times, and then I'm going to put a stop loss in there. That's it. Fixed stop loss behind that. I'm going to dollar cost average it at that point, that point, that point, that point, and that point I got a stop loss. You might as well just put your stop loss there and trade normally. Same thing. So no point in dollar cost averaging. And then you're actually doing yourself in, because if you're dollar cost averaging that way, you're taking 1/10 of the trade to start with, right? So just think about this. Now you've put your stop loss where you would have put it anyway, but you've only got 1/10 of the trade, then you double up and you've got 20% of your trade, then you double up and you've got 40% of your trade, and so on, so on, so on. And you get to that point and it stop losses and you lose what you would have lost anyway. But if it wins, let's say your trade goes into a win immediately. You only win 10% of your trade. But if you're just taking the stop loss under normal conditions, then if it won immediately, you would have won 100% of your trade. So instead of winning $50, you win 500 if you trade normally. But if you trade on DCA, you'll win $50 instead of 500. But you can still lose $250 or $300. You see, it doesn't compute because you're risking more than you're winning at the end of the day if you do it that way. So no, I've seen it fail. I've seen it fail so many times. No disrespect to anyone who does trade that way. I just say I've seen it fail so many times that I don't believe that it's going to be any better than trading the normal way. Hey, Greg. Good to see you again from Brisbane. Good to have you back on board, man. So yeah, we've been having an interesting day, and yeah, look. If you look at our situation with this account. Let's just go back in there again. And just going to go. Well, the news hasn't changed, has it? It's still the same. Market panic. How's NVIDIA doing? Ooh, looks like, yeah, that's my investment going downwards. If you look at the account statement, we're $500 down. It's all about stop loss, and we'll get that back. So it started out with my mistake. US 500 and 187 down. Euro Great British Pound, that was a stop loss out win. US dollar CAD, break even stop loss. Euro US dollar lost. Gold, we traded out too early. FOMO, didn't sit on my hands. US dollar Japanese yen, yesterday, stop loss. So the account's down $500, but we'll make it back. We'll get it back. And I just wanted to show the guys that didn't see it earlier that we need to, we're going to trade this account as a team and we're going to make it work. But we have to do it the right way. We can't do it with strange dollar cost averaging, anything like that. And that account has only cost $89. If anybody wants one, there is a link in the description as well. And if you lose it, you lose $89. So, okay, in my case, $100 because it cost more when I bought it. That's typical, isn't it? Right. Go. Good. If anyone gets that, that's what it's all about. Okay, so where are we now? US 500. Let's see what's going on there. That's another case of if you'd gone the wrong way and you were dollar cost averaging, it would have cost you a lot of money. And putting a stop loss into DCA just defeats the object of DCA. So there's no point in that. So no, every single DCA trader I've ever seen eventually comes short. Yeah, Shane, I hope that makes sense to you as well, and to everyone else, because there's a lot of DCA going around at the moment. It comes and goes, it ebbs and flows through the years, and I've seen it come, and then it goes, and it comes, and it goes. People get involved in it, and then they get out of it, and they realize that it's not working, so it goes away, and then it comes back, and it's always around, because for some other unknown reason, our brains seem to be more comfortable with dollar cost averaging in a loss or moving a stop loss away in a loss than actually being in profit. When we're in profit, our brains are more uncomfortable. It's insane, but we're more uncomfortable when we're in a profit than when we're in a loss. When we're in a loss, we're comfortable in a loss because our brains have told us, look, we chose that trade, even though we're in a loss, it's going to go well. I'll just double up on that and I'll get my money back. But when you're in a profit, how many of you are comfortable with going, I'm in a profit now, let me double up on that trade? How many of you are comfortable with that? You see, it's much more uncomfortable to do that because that just doesn't feel right, does it? But if you're in a loss, you're down, and let's say it's this Euro Japanese yen, okay, and it's going against us now, right? So we think, we're in a loss. Let's double up on that and then get our money back. Easy to do that. But if it's in a profit, if it suddenly goes into a profit, and this goes all the way up here, how many of you would be comfortable with saying, I'll double up on that and we'll make more? That's why I would say to you guys, get comfortable with following your profits first before you even think of trying to double up, because it's just not a natural thing. And it takes time to get around that. And you know how difficult it is even just to follow your win to the target. Even just to follow your win up is almost insanely difficult. You have to literally sit on your hands or take a brick and break your fingers so you don't get out of the trade. It's really difficult. Okay. Yeah. Should you sell? There are two order blocks up on each other at one day. Hit demand below what created maybe and just okay. So when you, the one with IC markets, yes, but somebody said they were quite sticky about when you open the account these days. You know, asking you all kinds of a million questions or whatever the case. So just be aware of that. Oh no, that was IG. Sorry, that was IG. I do have an IG account. I see. No, I don't have that. Enjoy should you sell. There are 2 order blocks up on each other one day. Euro JPY. You know, whatever broker you choose, Adriana, choose one that's got a reputation close to you, and see if they've got what you want. So ask them first. Ask them if they have what you're looking for. Every trader's got something specific that they want or need out of a broker. So just ask them if they've got what you're looking for, what you need out of your broker. You know, do they have the stuff that you want? Some people it might be training, some people it might be charts, some people it might be indicators, some people it might be specific types of instruments. Like in my case, I like finding brokers that trade the VIX and that sort of thing. Just ask if they've got it and make sure that they've been around for a while, because it's broker, it's going to take your money. I don't use IC, no. Look, the Euro JPY, we are a sell. Look, we sold. Okay, now if you look at it, Adriana, that it broke through the trend support, and I took the short, but it came back up and it's retesting this short-term kind of resistance level that I put in here. I just want to see what it does, but it could go all the way up and retest our trend support. My stop loss is right up here at the highs, so I'm not too concerned about that. But yeah, I'm actually short. We are short as a group. We are short. This is our account. We're short on the euro, Japanese yen. So that particularly is going against us at the moment. Not much we can do. But yeah, see what you're saying as well. It's good. Yeah, it may retest the upper support. It may. But hopefully it doesn't go all the way up to there, because I put the stop loss here. Anyway, hoping look, if it goes through this, then I'm done. You know, then as far as I'm concerned, it's done. But as it stands at the moment, I'll hold. I'm pretty confident that it's going to remain short as it stands at the moment. I think we'll get a bit of a shoulder here come down. Worst case scenario, I think it'll come up to this trend resistance and then come down, because that was a support that it broke through. Might retest that. But further than that, I don't think so. I think that's good. I think there is a level here as well. If I wanted to draw another line in, it would be a horizontal line, which I would draw in there. That says to me that's pretty much on that line as well. So that's quite a major support level, resistance level, sorry, right there. See, it's all crossing there. All of them are crossing in that exact spot. So this is a major resistance level. It might go up and retest that resistance level and then come down. So I'm comfortable at the moment. I'm not uncomfortable with the trade. I'm happy with that. Happy with that. Yeah, fair value. I don't really bother too much with fair value gaps at the moment. I believe they do sometimes work, but yeah, I'm not a big fan of fair value gaps. But yeah, that's cool. That's cool. If you use them, sometimes it'll be, but it normally plays into confluence with your support and resistance, with your supply and demand, with your trend, either way and what have you. So you can use them. I've actually got a video on how to use fair value gaps, and but I don't want to also confuse all you guys with all this fancy things. As I made a video for you the other day that points out that you don't want too much on your charts. You don't want too many things to look at because you're going to confuse yourself. But yeah, I'm not adverse to fair value gaps, and when they're there, you got to look at them. You have to look at them. And yeah, there is fair value in this area as well. So I do believe that we're in a fair value. We're hitting resistance. There's a good chance it's going to come down. What you're doing effectively with fair value gaps, with supply and demand, even with support and resistance, is you're just looking for the money. You're just looking for the orders. And that's what you're finding. You're finding the money. You're finding the orders. I find that the fair value gaps, the amount of money in orders is a lot weaker than, say, supply and demand or support and resistance. The strongest money is lying in the support and resistance. The trends are good, though. They're very good. If it breaks trends, gives you a very clear signal of which way the money wants to go. But yeah, a lot of orders do get left behind, so it comes back and takes it again. That happens with supply and demand. It happens with everything. It'll break through, but for some other reason, more orders build up there, and it comes back and it looks for those orders again. So yeah, people tend to put more orders in. They add the orders in there. Maybe one day this YouTube channel will have lots of people on the live show as well. When people realize that just following these guys with the 5-minute charts doing nothing will not really suit them best. But not to talk bad about anyone, but yeah, it's amazing. I think a lot of people don't want to hear the truth. They don't want to hear that the market's 50-50. They don't want to hear the truth that you're not going to make money from a system, but you're only going to make money from strategy. And they don't want to hear that there's a possibility that you might lose. It's incredible. When they hear the words, you're going to make $1 million today, you're going to drive a Lamborghini, you're going to win 500,000 a day, and then they're running off to those acts big time. And yeah, 9 times out of 10, it's not even true. Adrian, if you get confluence with a number of things, for example, like we did now, where you've got resistance, you've got a fair value gap, you've got everything all in one place. I mean, that just says to you, you've got to look at it. You've got to pay heed. You've got to pay heed to what they say. On 63.43. Yeah. Let's hope it doesn't get to 163.43. Yeah, it's amazing. Absolutely amazing how many people out there starting their riches. Yeah, like I've said to you guys before, most of my dosh comes from the investments. That's the best place. Trading is fun, and you make money on trading. You make a profit over the period of a year, and that's great. But most of the income comes from the investments because it's time in the market, not timing the market. Timing the market's a really difficult thing, and that's what we're doing. We're timing the market. And it makes it more exciting. It makes it more fun. It also helps you with your investing because you understand what's going on a daily basis, on a regular basis. And if you can be profitable over the period of a year, that's great. That's what you want. And you can make a living out of it if you want to. But just bear in mind that it's always difficult for people starting out to make a living from this. Because if you already have the cash and you've already got the investments and you've already got the money in the bank, then okay, you're just playing around, you're making money. But if you've got no money and you need to make money out of this, then it becomes really difficult, because then you start getting the FOMO, you start getting I need to do it now, I need to make money this month, I need to pay the bills at the end of the month, and then you start making mistakes. So that's when it becomes difficult to make a living out of it. If you've got enough to carry you through a year or 2 or 5 or 10 or whatever, then it's not that difficult, because then you're not stressed about what's happening in the next few days. You're only thinking about the trade, and as long as it makes you a profit over a year and that sort of thing. So be very careful of that scenario where you need to make a profit on a regular basis, and every couple of days or every month or whatever the case. It can become quite daunting. Okay, there's always news. Every day there's news. As I've said to you guys before, the news, there was a time when I just hung my hat on the news. The news was probably the most important thing in my life. I would go into all of these things and wait for these things to come out. Retail sales and CPIs and all these different Bank of Japan monetary policy meeting tonight. Oh, insane stuff, insane stuff. And I can tell you guys, it drove me insane. It was crazy. Don't do it, guys. Don't do it. Don't do it. It will drive you crazy. No need for it. I've tried it, trading the news, only the news, and it's not a good idea in the least. It's not a good idea at all. If you want to look at the fundamentals of the world and the big things that are happening in the world, and elections, wars, things like that, that's important. That's stuff that you need to keep an eye on. But I've actually stopped with the smaller things. Even the news yesterday about the AI and that sort of thing, that's a blip in the market. Nvidia will recover, it always does. Yeah, Kevin just actually brought up the question. Do you think Nvidia will bounce back? Oh, most definitely, without a doubt. This is a long-term thing, and it has overrun itself. It's run hard. I'll remain invested in Nvidia. I'm not going to pull my money out of Nvidia just because of some little story like that. No, I'll stay invested. I'm happy with that. In fact, I'll invest more in it. Happily invest more in it. Hey, Daniel, I'll see you on Thursday. Thanks for being here. It's been good having you again. And look, we'll probably shut down in the next 15 minutes anyway. So great, Daniel. Thanks for being here. Have a great day. Chat soon. Good timing by me. Lol. Oh, did you buy into it? Don't worry. If you bought an investment in Nvidia, if it's not a trade, if it's an investment, that's the one time I'll allow you to dollar cost average. When I say allow you, when I'll say it's okay to dollar cost average. I'm in investing. I'm a big fan of dollar cost average, because in investing it's a completely different ballgame. When I buy an investment like Nvidia, for example, which is Nvidia had a bad day. When I buy it with the mindset that I'm never going to sell it. Unless, of course, the news surrounding it is so bad that I believe that this is done. There's no way this company can ever make money again. And then I'll sell the whole thing and I'll buy something else with that money. But as it stands at the moment, I'm perfectly happy to hold it forever, and I'll add to it where I can, because I'm the firm believer that over time, it'll go up. Over the next 10, 20 years, it'll keep going up. And, if you take when you entered as well. So, for example, you start entering at the lower end and it goes up and then it comes back, and it's fine. Is dumping, pumping, people dump the pump. you want to see an NVIDIA chart, we can go and have a look at an NVIDIA chart. I think I can work that out for you guys. Oh, wrong one. Don't worry. Let me just. It's over here. Oh, there we go. I have to work around the system. Don't worry. I'll get you there now. I think I left it on that. Okay, that's fine. Let's just go here, and I can show you NVIDIA on here. So what you've got on NVIDIA is quite a big gap here. It is on the day chart. There's a big gap down from 142 all the way down. She's down at 118. Yeah, bad news, all the stuff surrounding it. So it's had a dump. But I mean, you got in around here and you kind of gone up and added to it as you've gone along. In fact, I mean, if it comes down to here, I'll just double my trade and my investment and just add, because this guy's going to just keep on going up eventually. So there's your NVIDIA chart. That's what it is. The market panic. It's overblown. Yeah, totally. It triggered a tech sell-off. It's a tech sell-off. It's NASDAQ sell-off. NVIDIA sheds $589 billion. Yeah, it can happen. It can happen. But I also keep my investments, and I'll talk to you about that now. In a very careful, let me just put that back in the corner here. In a very careful way. In other words, I don't put all my eggs in one basket. If one of my investments goes down completely, I won't lose more than 10% of my investment account. So that too, I keep it safe. I always keep it safe, just like with this risk management. But my investments, like I say, I don't trade in and out of them. I leave them. I forget about them. I bought it, I own it. But it did lose a lot of money yesterday. Wow, that was quite a dump, eh? That was quite a dump. That was quite a quite a nasty one. So we'll see what it does today. We'll see if it somehow recovers or if people start buying in, because now it's a good buy. And yeah, everything's gonna correct. I wouldn't say crash or fall. I think we're looking at a correction. Yeah, there's been too much of this up scenario for a long time. I think we're due for a bit of a correction. And I don't think a massive correction. I don't think it's going to go to sort of horrible levels. I think it'll probably come down to 5,500 or 5,000. And then you can just start buying in, on the US 500. The NASDAQ is obviously the one that took the knock yesterday. Look at that, a big knock. But look at this, the buyers have all come back in here. See, if you read charts, there's the dump. And there's all the buyers coming back into the market here. Look, there's some sellers come in here as well, but looks like it wants to climb back up. And I think it's going to be a bit of a recovery day. So, yeah, I'm not too concerned about that. That's okay. I think it'll be just fine over time in the long run. Wouldn't worry about it too much, guys. If you're invested in NVIDIA, leave it. Don't worry about it. If it's a trade, then, yeah, just if you're having a trade on anything, if you're trading stocks and doing trading, then make sure you've got a stop loss. But when it comes to investment, don't worry about it. Investments are all about time. They're all about the time in the market. And you got to look at it over a period of 10, 20, 30 years. That's how you look at it. I can't look at 30 years in advance anymore. That's too far away. Yeah, but then that's fine. If the DeepSeek AI news actually fundamentally altered the way NVIDIA makes business, it would not recover. Yeah, there's always that. There's always that. Look, if NVIDIA does badly, then you sell the whole thing and buy something else. Yeah, that's the only way to look at it. That's the only way to look at the whole situation. But as everyone says, it's overcooked. I don't think it's that fundamental, and I don't think it's that serious. We shall see, though. We shall see. We'll see what happens. We shall see how it goes. You know, at the end of the day, the business still has the same plans. It's still looking to do the same things, and yeah, we don't know. Like I say, when you have investments, you know, you still got to manage a risk. You know, if you can't just have one share, you've got to try and have 10 shares or more, and try and balance the amount of money in each investment to about the same amount, so that if one company actually goes bankrupt, you only lose a small portion of the account. I was very lucky in South Africa with Steinhoff, because I was heavily invested in them. And the court case came, you know, when they went to list in Frankfurt. And I saw this court case coming up, and there was just a gut feel that, and it started to come back off. I mean, I bought that thing at like, I don't know, it was 5 or 6 Rand. And at the time, it had gone up to about close to 90 Rand. I had a huge sum of money in there. And the Frankfurt guy started investigating the Germans. And it dropped a little bit and started dropping around the 80 and below. And I just said, you know what? I don't trust this at all. And I got out. Sold up, got out of that one, sold everything. And soon after that, wasn't like a week or two, that thing just crashed down. You know, it closed down. I mean, the guy that was running it at the time has actually shot himself since. Disastrous. That thing just was all fraud, the whole thing. So that was lucky. You know, sometimes you get lucky and you get out of something. But even if I'd lost that, it would only have been 10% of my account at that time. But I had so much in it. It was a big one. So I was very, very happy when I was out of that one, and I'd made a good profit as well. So yeah, this type of thing could happen with NVIDIA. So you do have to keep an eye on it. Keep one eye on it, just to make sure that you don't lose all your capital. But yeah, that's investments. That's how it goes. That's just the way things go. If I look at it, for example, let's just do the whole news thing again. Just going to go back to the news here. Just have another quick look at this, and if it'll give me the news. Hopefully it's not going to play that video now. Yeah, it is actually. Let's just stop that. Don't jump off the NVIDIA bandwagon just yet. China's AI startup DeepSeek triggered a tech sell-off today as investors panicked over fears of a cheaper open-source large language model, raising concerns about the US's AI dominance. The tech-heavy Nasdaq went down. Okay. This sent a ripple across the broader technology sector. Okay. The fall adds pressure to the group ahead of the fourth quarter earnings. Wall Street is already expecting the group's profit growth to fall to 22% in the fourth quarter, its slowest rate in nearly 2 years amid renewed focus on capital expenditures. But the panic selling may be overdone, according to top analysts. The market's reaction overblown, telling that development of DeepSeek doesn't spell out doomsday for AI infrastructure. I'm not in the belief that we're anywhere close on the cap on compute needs for artificial intelligence. I'm of the belief that if you're freeing up compute capacity, it likely gets absorbed. We're going to need innovations like this if you're going to be able to keep things going. So, you know, there's a whole bunch of things you've got to look at. Yeah. I don't know. Look at this. The market is completely missing this one, human one. If we can use compute more efficiently, the companies that we're saying aren't driving enough revenue will be able to build them more as cheaper. They'll be able to create solutions with less overhead expense, and they're going to drive more earnings per share. So it's not going to change anything, guys. I think it's going to be all right for now. That said, we have to watch it. We have to keep an eye on it. We have to make sure that it doesn't do anything untoward. But at least in this case, it's not some strange court case like in the past, with the other one that I talked about now, where there was a whole fraud involved. This is just an investment thing. And, you know, they're still going to be making a 22% profit. What's wrong with that? You know, I don't know. There might be a slight reduction in earnings and that sort of thing. It might re-rate the price. You must remember all prices on shares are re-rated. Traders rewrite share prices based on future value. We don't rewrite share value based on today. We look at what the possibility is tomorrow. So if we expect earnings to be really bad in the future, we'll rewrite the price according to that future. So that's how it's going to work. It's due for a correction, and that's what it's getting. Kevin says the German 40 is well above the highs, but it would have turned to the downside, but it's still very high just now. Yeah. Yeah, Shane, it will fill the gap, but like I talked about gaps earlier, you see there's a gap on here as well. This is the US 100. It's going to fill that gap. This is the tick, the NASDAQ. It's going to fill that gap. And NVIDIA's got that same gap because NVIDIA makes up a huge proportion of the market. So what you've got to look at, gaps get filled. But it doesn't mean they're going to get filled today or in the next hour or the next 5 minutes. This could take months to fill. It could take a year to fill. But what I can tell you is the gap will get filled. So on NVIDIA, the gap will get filled somewhere down the line, unless it closes down. Do you think NVIDIA is going to close down? Probably not. Most likely not. I have my doubts. So, no, guys, NVIDIA is not closing down anytime soon. Looks like a strong company to me. And the NASDAQ will also close that gap. Yeah. Yesterday there was a lot of selling, but today I think there'll be a bit of recovery. There's always a bit of recovery with things like this, because what actually happens when that kind of news comes out is people panic, knee-jerk reaction, everyone rushes out the door. And then they sleep on it and let it settle in, and they think about it, and they, oh, wait a minute, maybe I've overreacted, and everybody starts getting back in. And then people start seeing good deals as well. They start seeing good value for the buy, and they start buying again. And that's why the market goes up and down in the first place. So no, I wouldn't be too concerned about that just yet. Not just yet. So guys, I think it's time I head on my way and head off. Don't forget to come back and watch tomorrow's video. Very important. What was my video about? Oh, market value. Yeah, the next video is about if I started trading again. What would I do if I started trading on this? That will be an interesting one for you. Guys, come back and watch that. And then we'll see you again on Thursday. I'll see you on Thursday. And we'll chat a little bit more, and we'll see how the account's doing and see if we're getting anywhere. And we'll add some more trades. You can think of anything else that you want to talk about, any trades that you want to talk about. Let's get to it. Let's chat about it. But for now, I'm going to head on my way and get on with the day and see how we go. Guys, thanks for being here. I hope you enjoyed yourself. I certainly did. And till the next time, cheers. Ciao. higher.